Okay, Bill, we've got one for you specifically. Do you know what the forecast for the interest rates will be?
Slightly cloudy with a little bit of sun. I feel, based on everything that we're seeing right now, how I've kind of explained it in the past is that we had this huge party, free alcohol, everything is free food, let's just party, party, party. And that was during COVID. That was you're going to make more money from working on unemployment. And that really shot up inflation. And inflation shot up so high that they had to start increasing the cost of money to try to slow things down. So we had 11 times that the Feds increased rates on us. We're seeing the first drop in rates because inflation has slowed down, and we continue to see it slow down. Like 35-40% of that is around rents, and we're seeing rents finally drop down lower. We're seeing income that are stabilizing. We're seeing unemployment numbers. They just came out and said that there was 815,000 jobs that they mistakenly quoted that were there that were not really there. Mm-hmm. So the economy is not doing as good as they have been reporting. So their hangover has to happen. A hangover is like a recession. Things slow down. A recession shows that a recession is not always bad for real estate, but what a recession does do is it lowers mortgage rates. Mm-hmm. So we're expected to see a 0.25% drop in the Fed's rate, which isn't mortgage rates, but it's the cost of money going, and we're going to probably see a continuation as we get into the new year and as the reality of things are not as good as they say. A lot of government spending will be gone at the end of 2024, and that's kind of what's keeping things afloat. If the government is spending so much on streets and roads and there's jobs all over the place. And as soon as that spending slows down, we're going to see the economy slow down, and then we're going to see rates fall. Now, what a lot of people are doing is waiting for rates to fall, and the problem with that is that when rates drop 1%, the payment drops 10%. So if your payment drops 10%, and we're approving people for a $500,000 loan, and they're having a trouble because they can't find a house for that and be able to win it with multiple offers, I'm going to give them a pre-approval for $550,000 now. What do you think they're going to do? They're probably going to go 505, maybe 525. They might even say, I don't want to lose this house. I'll go to 550. And they're going to see a 10% appreciation. Well, that doesn't really help them out at all. They waited a year for rates to drop, and they're going to actually pay more for the house. So that's kind of why we say date the rate and marry the house, because it's better to buy today when there's still a lot of ability to buy versus there's 5.4 million new buyers come out for every 1% drop in rate. So I feel we will see rates in the low fives in the next 12 months. We might even see in the low sixes, maybe to hit 5.99 before the end of the year.
As they say, the cheapest time to buy a house was 20 years ago or tomorrow.
Perfect.